Ahoy there, trader, and welcome back. This is the Anti-Investor Swing Trading Podcast. Now let's talk about the myth of the coin toss in trading. So most new and even some experienced traders believe that trading is 50-50, a coin toss if you will. If it's not going up, then surely it must be going down.
Surely you can't be serious.
I am serious, and don't call me Shirley.
Well then, let's explore the truth of that today. Welcome to the Anti-Investor Swing Trading Podcast, where we talk about swing trading stocks, stock options, and index futures. My goal is to help the next 1,000 traders become financially independent and retire early from the financial markets by providing the right tools to use, the rules to follow, and the software to assist you so that you don't make the same mistakes that I did. So from now on, I'll be your personal swing trading mentor to show you the way. Also, if you like what you hear today, please show your support by taking a screenshot and sharing on LinkedIn. And for bonus points, tag me in it. The links are in the description. If you believe that trading is 50-50, then you're very much mistaken. I've seen several big names talk about trading being 50-50 and had similar conversations with new and up-and-coming traders talking about it being 50-50. But for Pete's sake, it's not. And I censored myself for a change, so feel free to insert your own expletive. It's not 50-50. It's not like a coin toss. If only it were that simple. Because surely the markets can either go up or down, but they can also remain unchanged. Now just let that sink in for a moment. That's right, it's not 50-50, is it? The markets can go up, they can go down, or they can remain unchanged. And for the purpose of the unchanged description, let's also include a narrow band of trading or a consolidation as being sideways or unchanged. Now this means that it's not 50-50, and you actually have a 1 in 3 chance of being right on direction at any given moment. And that's before that we decide on what stock to trade or what market to trade, whether it's stocks, index, futures, the various indexes around the world, before you've even decided any of the other stuff. It's a 1 in 3 chance. Then you've got to select strategy, where you exit, the timing, the exit, the risk, the reward parameters, and all the other things that go into a robust trading strategy. Now the trading strategy's job is then to shift the shitty 1 in 3 chance of just simply picking the direction right, assuming that you're following the trend, of course, so that the odds of success are in your favour, or that the risk to reward profile is favourable with a lower success rate. And ideally a bit of both, which is what I prefer to do with my own trading strategy. Just have that fusion of favourable probability, an expectation, and a slightly higher risk to reward ratios. I like that fusion of two things in my own trading. Now this is what I preach every single day to help give you additional factors in your trading success regardless of your strategy choice. There's some pillars of success which can be universally applied to anyone in any situation. Well, at least I like to think so anyway. First of all is trade small. You've heard me say it before. Trading small allows you to detach emotionally from your trading. That allows you to trade with a little bit more frequency, ideally with the frequency that your strategy is supposed to take. Again, if your strategy sets up 1 trade today, then you take 1 trade. If it sets up 5 trades today, then you take 5 trades. That is ideally what you want to do. Otherwise, you're being selective over when you pick and choose the strategy. And what I want to do is follow a rule-based strategy with consistency. So the third pillar is follow your strategy consistently. Now, this is where, as always, rule-based trading has an advantage because there's less discretion, and at the click of a button you can have the alerts overlaid on your favorite charting software. Certainly that's what I've done with my own trading, and all my students get a copy of my algorithms and chart assistants so that you can see on the charts, hey, if I just followed the rules as per laid out, I like to buy the dip and sell the rallies, etc., in the unique way that I like to do it, and trade the trend, then it plots all of the possible alerts so that you can see historically, well, what would have happened if I'd not really thought about it a great deal, what could I have done? The idea is to give you confidence that you've got a strategy that's robust, that gives you an upward sloping equity curve, at least from a historical perspective. The idea being that you've got the confidence to place the next trade. So you've got a proven strategy that has a positive expectancy. And when you trade small position size, it allows you to trade with the frequency that a strategy dictates. Again, whether it's 1 a day, 2 a day, 5 a day, whatever it dictates. Because what we don't want to do is try and apply discretion. At least that's what I'm trying to remove in my own trading, the discretionary decision. I hate the should I or should I not, the if I'd just done this, the coulda, woulda, shoulda decisions. I want to know, yes, here is the setup. And this is often why I refer to what I do as a production line. So applying these pillars allows me to start to systematize my decisions. If this, then that, an algorithm. And when you start to stack these odds in your favor, and there's multiple things that contributes to success, a little tweak here, a little adjustment there, then the shift from that 1 in 3 chance, the 33% chance of just being right on direction, starts to swing in your favor. It moves over, and again, for my own trading, I publicly called over 1,400 trades in real time when I ran my alert service. And because of these little tweaks, adjustments, these minor improvements at various stages of the production line, between 60 and 65% of the time, I was showing favourable returns, positive returns, making money, for want of a better description, on the alerts that I was calling. And again, there was nothing magical or creative about what I was doing. It was just a systematic approach that said, when this set of conditions happen, place the trade. And I was trading with small enough position size to trade with the frequency that they set up. Again, I designed my system so that I get a little bit higher frequency. It's a dial, if you like, on the production line. You can speed things up or you can slow things down. I like to have my production line fire off at something every day. That's the way I want to trade. And if you want to turn it a little bit faster, you can have 2 or 3 things every day. And if you've got other things going on in your day-to-day life, you can turn the dial, the speed of that production line down, and slow things down so it goes from a couple of times a day to once a day, maybe even once or twice a week. You can find your own balance relative to the individual situation. Again, I like to have mine chug along a little bit faster than others. Now, you can spend the next 10 years trying to figure it out on your own. Or you can learn in the smartest possible way and follow the footsteps of someone who's already figured it out. There are some wonderful systems out there. There's some wonderful mentors out there. And the fastest way to any success is to find a mentor who's already doing what you want to do. And I don't mean simply trading the market or making money from the markets, because a large part of finding the right strategy for you is just that. It's finding the right strategy for you and your situation. If you're looking for an investing mentor because you like or have a personal preference for investing a la Warren Buffett, then I'm not your guy. I'm not the person to be able to show you that. I'm not an investor. I've got a time horizon of anywhere from a day to a week to a month to the quarter. I want to get paid with all my strategies. Again, there's several that I follow, all with the objective of getting paid at the end of the day, the week, the month, and the quarter. And that's how I do it. And I want to be able to apply my strategies in 20 to 30 minutes a day at an absolute minimum, or every other day from swing trading. And if I'm doing the more shorter term strategies, I want to be done in anywhere from 30 minutes to 90 minutes should I choose to day trade. So everything is time compressed for what I want to do, because what I don't want to do is sit all day, every day, flicking through chart after chart after chart. I want to do other things. I want to spend more time away from the computer than I absolutely have to. So that's the way I've designed my strategies. It's minimal time investments without degradation of the outcome, the positive expectation that I was describing. So finding what's right for you is paramount. So again, finding that mentor to speed up your learning curve. Again, the reason why I always mention this is I did it the hard way. I didn't find a mentor. I wish I did. With the benefit of hindsight and looking backwards on a career, I wish that I'd found someone. I didn't know that there were such things. Again, the internet was brand new, if almost non-existent when I first started out. So it was very difficult to find someone in the local area that was doing what I wanted to do. So, these days, you can very easily find someone that is doing what you want to do. And I don't mean, again, coming back to the point, I don't mean making money from the markets, because there's lots of methods of trading. And another way that I describe this is, if you don't have time to day trade, then there is little point learning how to day trade if you either A, don't want to do it, or B, don't have the time to do it. What if you've got a busy schedule and you can't commit to the time. Again, coming back to the way I like to day trade, I want to be at the open and find an opportunity in 20-30 minutes, which is all predetermined, and I can, many times know at the beginning of the day if I need to schedule some time around the opening bell to finding that opportunity and waiting for the entry condition to be met. And it's either there or it's not there. Again, one of the other strategies that I have for people who want the short-term trading but don't have the time commitment, you can check in at 10 and it's either there or it's not. Place the trade, come back at 1, and you either got the trade live or you're not. If it's live, you come back at the closing bell, and if it's not live, you cancel your orders. So you can have that automation of decisions when you've got an algorithm. And that's what I'm trying to describe more than anything. What do you want from your trading game? Money is always a byproduct of process. So what's the process? What's the strategy that you're looking for that not just is proven and makes money, but something that you can also emulate? Because I also see a lot of traders try and follow in the footsteps of a mentor that has a strategy that works, but is just completely discretionary and can't always be emulated in the way that you would imagine. So give it some thought as to what you want from your trading. Again, I'm always going to be an advocate of rule-based trading because, again, I want it for me first. I want to remove the discretion. I want to remove the uncertainty from my own trading. And as a byproduct of that, it means that 99% of the time, 99% of the traders that plug into my process can emulate similar successes. Again, you're never going to get it exact. No one will. I don't get exactly the same as the back testing. Again, no one will. But if I can emulate a comparable success, a comparable expectation, we're all taking the same trades, and we may have a slightly different entry just because of when we're looking at these things, and that's fine. That's cool, all fine and dandy. But that's what it's all about. It's emulating the types of success that we're expecting. If that's what you're looking for, then get in touch. If you want some help with it, get in touch. If you want to see if what I do is right for you, then let's start the conversation. Shoot me an email to phil@antivestor.com. Let's start the conversation. And I'm not naive enough to think that my way is the only way and is the best way. And if what I do is not right for you, then great. I'll always point you off in the right direction. But if it is, we can have a slightly longer conversation and sort out the specifics for you and your situation. So that's all we've got time for today. If you like what you heard, be sure to follow and listen to the very first episode where I map out one of my 6 most profitable money-making strategies. And as always, thank you for giving me your time and attention and making me a part of your regular routine. Have a wonderful day, and I'll speak to you at the same time next time. And until then, toodaloo. Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Antivestor provides educational information and does not provide financial advice.